update on portfolio performance over the past week. On a one-week basis, all 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from CBAM 1 returning 0.12% up to CBAM 5 returning 0.9% on a relatively risk-on 1 week. And we would see the strongest sort of attributors to performance being HSBC MSCI China down to Bailey Gifford China, despite some of the weakness we've been seeing from manufacturing PMI coming out of China. I think some of the signs that have been taken has been a positive sort of signaling coming from Beijing in terms of support policy, which may involve further monetary accommodatory stances, or even support for the distressed retail property market, as well as some fiscal stimulus as well, just to spur that sluggish recovery we've seen in the reopening trade for China, and that would see Chinese equities having a bit of a risk-on rally on the 1 week basis. In terms of detractors from performance, we've seen our interest rate sensitive positions in the wake of developed markets central bank interest rate hikes, both last week from the US Fed and the ECB as well, really moving those longer dated government bonds in Japan and the United States downwards more than 60 basis points on the 1 week basis. And also we did continue to see that tightening stance from the Fed, also leading to some strength for the US dollar versus sterling, up 0.75% on the 1 week basis as well. In terms of detractors from performance, on a quarter-to-date basis rather, 8 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from CBAM 1 returning around 1% up to CBAM 5 V2 almost hitting the 3% mark there on a quarter-to-date basis. Again, for reasons that I highlighted earlier, we did continue to see quarter-to-date basis strength coming out of Chinese equity, with the top 3 performers being MSCI China, Columbia Threadneedle, and Bailey Gifford China as well, reflecting some of that optimism coming in after some derating that we had seen in Chinese equities as well. We continue to see some headwinds there for the Hypnosis Songs Trust, obviously, and really interest rate sensitive assets down 2.76% on a quarter-to-date basis, and despite earnings remaining robust from the royalties that I've highlighted a couple of weeks ago as well, we did continue to see some concerns there that there has not been any really real test of the sort of valuation of the catalog held within the portfolio. We also saw headwinds there for Vanguard Japanese government bonds as the Bank of Japan continues to move toward tightening, although albeit gradual move towards a tightening stance, with really seeing that adjustment of the yield curve control, allowing the yield on the Japanese government bonds to go above 0.25% to 0.5%, and 0.5% eventually now Bank of Japan representing that, or presenting that rather as a sort of reference point rather than a hard target, and that will be seen as some headwinds for the longer dated Japanese government bonds down 1.86%. But then again, on the quarter-to-date basis, we continue to see some strength from sterling versus dollar, and that has seen sterling strengthening 0.37% on a quarter-to-date basis. On the macro front, we continue to see some deterioration of manufacturing PMI data across most major economies, as we saw recordings of manufacturing PMI data deteriorating across the United States, UK, the EU and China as well this week. And speaking of the EU, we did see encouraging sort of data coming from an inflationary point of view, with some signs inflation is easing in the EU region, and the EU region again GDP really also coming in positively, and the economy seeming to have been delaying or averted a potential recession in Q2. We also saw some we're also going to see some non-farm payroll data coming out of the United States, where the United States has been surprisingly resilient in terms of the labor market, and also that consumer strength, and that has been taken as a net positive for the United States. But looking ahead, we'll be getting a lot more data in the coming week, and we also saw that Bank of England decision raising its base rate by 25 basis points as well.